Hi there. Thank you for tuning in to the Savvy Sibyl YouTube channel. Today we're going to talk about things that you should consider, or should I say we should consider, before investing. Of course, it goes without saying, we all want to invest because we're looking to build a better future for ourselves and making sure that we're comfortable with our lives. However, before we jump in, there are some things we should consider to help ensure that we are pursuing our goals and desired outcomes. So, let's talk about some of these. First, we should consider whether or not we already have adequate emergency savings. Like, really, do we have the capacity to invest? If we're investing our emergency savings, then maybe we're not at the time or space where we should be investing. We want to make sure we have our emergency savings in place first. And then we should consider whether or not we have debt with interest rates that are higher than the average return on the markets. I mean, will we wash away our earnings from the market because we're paying out higher debt with our interest rates? So we have to do the math around those numbers as well. And then if we have a matching opportunity with our employer where they will match funds for us in a 401k, any type of sponsored plan where there's a match, we have to ask ourselves, are we giving away free money? Now, in that case, if we do have the opportunity to participate in an employer's plan where there is a match, where they're giving us free dollars, we do need to invest because that's just free money that we are flushing down the toilet if we don't take advantage of it. And then we need to ask ourselves, what's our time horizon for investing? How much time do we have before we actually need the money that we're investing? That's a very important question to ask because we need to at least be able to hold anything that we invest in for over a year just for a tax savings perspective. But if we tap into those earnings prior to a year, then we may actually pay out a bit more in tax. So there are some things around the time horizon that we really need to consider how long we can hold these assets before actually needing the cash. And then we need to ask ourselves, what is our appetite? What is our risk appetite? What will we invest in? What type of investment that won't give us heartburn or keep us awake at night or cause us to have these knee jerk reactions when the market has a lot of ebbs and flows? So we need to know our risk appetite. And then we need to know what's our investment knowledge level. Do we understand the pros and cons and the complexity of the investment options that are available to us? We don't want to just act off of a hunch that we overheard someone else talking about without fully knowing and understanding the investment vehicle that we're considering investing in. And then, do we understand the costs and trade-offs for the various investment styles? There's a buy and hold style. So this is where you buy and actually just hold the investments. There's also what's called a passive management, where there are some trades that happen maybe once or twice a year, but otherwise everything kind of sits the same. And then you have active management, where there's a lot of trading going on throughout the year. And so, which of these more closely align with our investment philosophy? We need to understand what are the costs and trade-offs with each of those investment styles, because there is a cost and a different cost for each one of them. And then, how or when do I diversify my investments? Sometimes, if we over diversify early, then we're not going to see the momentum with our investment because maybe the investment amount is so small that we've over diversified it. So sometimes, if we're going in small, we need just a little diversification or no diversification for the momentum to start before we begin to diversify. So, knowing when to take action around diversification and how much diversification makes sense, and how to not overly concentrate at the wrong time, when does that make sense? These are things that we need to understand and consider before investing. All right. So these are just a few considerations we should consider before investing. And as you can see, I didn't mention any hunches or guarantees. There's an entire list of risks we must consider that we have no control over. The items mentioned here are the things you can control and should control as an investor. Investing includes risk, including the potential loss of the principal that you initially invested. And there's no investment strategy that can guarantee a profit or protect against a loss in periods of declining values. I hope you have found this to be useful. Hi there. Thanks so much for listening. I hope that you have found these financial insights around considerations for investing to be useful. And if we can be of further assistance, then please do reach out to us. We're here to help.